Let's do a really deep dive analysis of Bitcoin because yeah, it's important now. First off, read this disclaimer carefully. Yesterday was a very bad day for the market. You can see that the S&P 500 lost minus 3.44%. In these times, it's also very interesting to ask the question, what didn't go down? So you can see, look at the heartbeats. The doom and gloom portfolio did do well, but that one is bearish. Look at the money here, losses across the space. In the leveraged territory, some of the natural resources went up. We can look at that. Then you have the bears here, unsurprisingly doing well. Looking at natural resources, yeah, we saw that there was a pullback in some of these, silver, gold, which we talked about. If we go to the megatrends, interestingly, supercars for some reason did well, which is kind of interesting. You can see here that Porsche did well, and Aston Martin and Rolls-Royce. That's interesting. Seafood also did well. In the indicators, you can see that euphoric spending, ironically, the euphoric spending stocks did well, the fossil fuel stocks, they did well, and football clubs. And then the sell-off stocks actually rallied a bit. Okay, so these are stocks that seen big sell-offs, like these, like Norwegian Cruise Line and Coles. Yeah, strange times. Okay, so Bitcoin doesn't need a whole lot of introduction. It's the most popular cryptocurrency out there. It is the original one. So let's first look at some of the seasonality here, okay? Because throughout these years, there's been some strong trends. Obviously, you can see that this summer period usually is strong, February strong, and October, November, 67% of the time, Bitcoin / US dollar, it closes higher than it opened. So there is some seasonality strength here. Let's look at it against the dollar index. Dollar. Like that. If we can get it up. Here I'm using the UUP, which is the dollar index ETF. You can see here that Bitcoin usually tends to outperform here the dollar in October and November. That's interesting. Let's also look at it against the GLD, which is the gold ETF. Like that. Let's look at the seasonality. Yeah, Bitcoin tends to outperform October, November, but we do not have that many years. But there is clearly some seasonality at play here. Okay, so let's look at the big picture here, the chart. Okay, so these are weekly data points. We get a bunch of years. Here is obviously the Bitcoin bubble, which ended quite epically. Then we get support here at the 200-week moving average, big rally. But then we have a sell-off. If we measure this rally, you can see that it was quite profound, 322%. One of the things that jumps at me when I look at the charts, which should jump at you as well, is that it's very clear that Bitcoin moves, it tends to move in one major cycle. So let's draw it to make it clear. So you see that there's some cyclicality pattern. It moves in cycles like this, and then there's these major cycles. I think that due to this pullback to the 200-week, you could make the case that this is one cycle and this is another cycle, meaning you could make a case that this, what started here, is another cycle, similar to these two previous ones. One of the issues we have with the cycles is that, this was a longer cycle. This one was, well, let's look at how many weeks it was. Okay, so like this, up to this high, that was 196 days. How long is this? Up here, that's 154. So if we zoom, yes, so there could be more days in this cycle. The problem with these cycles is that they have become shorter, which means that there is a risk, there is a very real risk that in the same way that we had the decline here and the decline here that went down to the 200-week, there is a risk here that this could turn into a decline to that support level. That's a probability. So that's more of the bearish side, but there are some bullish patterns as well. You could make the case that this is an inverse head and shoulders pattern. Shoulder here, there you have a head, and then you have a shoulder. In order to have a real breakout, we would preferably get above this resistance level. This is a key horizontal resistance level, but we failed. So the issue here is that this pattern didn't play itself out, but it's still here in the charts, which means, okay, that you could make the case that this is not really a right shoulder, which if we do get that pullback, then we will have a more, you know, textbook-ish inverse head and shoulders pattern, which could then resolve to the upside. Hence, so there's sort of like, so even if we do get further pullback, there could be some, it could create a very nice pattern for the bulls. So it's not like all doom and gloom here, even if we do pull back. If you look here at the purple 20-week moving average, it has been relevant in the past, as you can see, as a resistance level, which means that it, and also as a support level here, which means that it seems like it is being used as a support level here as well, so that's also a key level to watch out for buyers stepping in. So far they have, but if you look at it in the past, generally speaking, it seems like Bitcoin likes to actually test them a bit more thoroughly. Let's quickly look here at the daily data points. As far as the support resistance, we have sliced through the 100-day moving average, which is a bit unfortunate, a very nasty candlestick. We are bouncing a bit today, that's nice to see. We also have some horizontal support here as well. Then we do have the 200-day moving average in red below us, which is one of the most key you know, moving averages. It's the most watched on the planet. If we do pull back further, it would ideally be, we would want to see support at that moving average, basically. If you don't get support there, then that's going to trigger a lot of algorithms that will basically add selling pressure, because that's how the algorithmic traders work, is that they look for patterns and interaction between indicators and price. And if you do see a slice of, let's say, the 200-day moving average, then that is a signal to go short, you know, for the algos. And this is a very self-reinforcing mechanism. Looking at the RSI here, you see that it is not really that reliable as far as overbought levels go, but you see here during the previous two pullbacks, the RSI did get oversold-ish. So as far as the buying goes, it is actually a bit more reliable. There's a 37% positive correlation with S&P 500, that's interesting. Let's look at the relationship here with the dollar index, minus 12%. Let's quickly look at the daily data points as well. Here we have, it's a bit messy sometimes to get these indicators. So it seems like it's minus 86% negative correlation. The daily data points, I'm using 156 data points to calculate the correlation. Let's look at gold, which is another one we like to look at in regards to Bitcoin. So there's a 39% positive correlation here on the weeklies. On the daily data points, there's an 85% positive correlation. Okay, so that's the correlations. In case you do not know, so a statistical correlation, it varies between -1 and 1. Okay, so if you have a -1 correlation between two items, it means that they move opposite each other. If you have a 0 correlation, then there's no correlation whatsoever. And if there's a correlation of 1, it means that they move perfectly together. The problem, well, the thing about correlations is that when you use them for building a portfolio, is that if you have a bunch of items which are very strongly correlated and you think to yourself that, well, I am diversified, well, you are scientifically not diversified. Even though you do have different positions, they do move together. So the ideal thing when building a portfolio is that you should have items that have that do not move together, but that all in a profit. That's the thing. You obviously do not want to create a portfolio where things cancel each other out and you end up with no gains at all. So create a portfolio where all the positions you have are positions such that the trend benefits you, but you do not want a strong correlation. That's the thing. Diversification on a correlation level. Whatever you do, of course, don't fight the trend, and may the trend be with you.